Well, good afternoon, everyone, and welcome back. It was a tumultuous morning where we saw the producer price index data come out as a big, hot, scorching number, suggesting that corporations are eating into the costs and not passing it on into prices. Nonetheless, the market did come back up and bounce off of lows on the day and currently resides above a key weekly pivot line. The 64.76 area on the S&P 500 is maintained as support with price action in towards the end of the day. As you can see me recording this towards the end of the cash hour session. When we take a look at the S&P 500 in a little bit more detail over here, you can see that we still have yet to make higher all-time highs vis-a-vis yesterday's close. Nonetheless, we are in a marketplace that is still positive, holding up. The NASDAQ is the drag, believe it or not. It is currently down 0.05%, while we see the Russell 2000, which has been in a short squeeze over the last several days, not actually be able to perform today. It's down about 1.3%. What we saw this morning with the market coming down through the PPI print was a strong move on the dollar and a weakening of the euro. That weakening of the euro remains in place. We still have not seen the euro come down and break below the center of its weekly pivot range and unravel below this area. Nonetheless, we've got the euro in what seems to be a swing high formation, supportive of the dollar up, and this does open the door for the market to start weakening as we move through the next 24 hours and see the market come to the end of the week. Now, the S&P E-minis have been operating in an uptrend channel ever since Friday, August the 1st. Now, Friday, August the 1st was where we repriced in a rate cut for September. Powell took it away back on Wednesday, July the 30th, but we did see Microsoft and Meta come in after the close, pump us up, take us to new all-time highs. Apple and Amazon didn't really carry the torch any further. The market saw the jobs data revisions last Friday. Those revisions did give us more of a negative move in the market up until the Treasury market started to squeeze. The Treasury market squeeze happened. It did take rates down, took the dollar down, took the equity market back up. We've been operating in the uptrend channel ever since then. Currently holding at the center of the channel for the S&P 500. The NASDAQ, as you can see, is still in the lower half of the channel, still stuck in the mud and stuck underneath that resistive structure that was built overnight last night. We've had a lot of tradability in this market. The market is stretched. The dollar is likely to get more strength. The market is in peril on the backs of that. Nonetheless, we are well above the pivot line, 64.76 and a tick. While we remain above that key level, the opportunity to come up, retag yesterday's intra-session highs of 65.02 and a half and make higher highs in the 65.13 to 30 area is still on the table. Post that, we do expect this elastic band of a market to be stretched to an extreme, start to fray and snap, and start a pullback back down. I hope that this video has given you some context for the market move and the way that I see it. Technicals behind this are validating the overall picture. We are still in a positive signal state on a daily chart, on a 4-hour chart, on a 1-hour chart. We still have the potential to make higher highs. However, the sustainability of those highs is what's really in question, and it's less likely sustainable. I hope you've enjoyed the video. I look forward to seeing you on the flip side. Have an incredible rest of your day. Bye for now, and thanks for watching.